We're going to start the panel in just a moment. And just a reminder, everybody, the Thai Houston Venture Forum is going to be on November 3rd, Thursday, November 3rd. Take place at 2 p.m. at Station Houston. If you go to gus.com, if you're one of the entrepreneurs here and want to visit with different angel groups and investors in the community, go to gus.com and find the application, apply. It'd be a great way to get feedback from our screening panel, as well as look to use the event to interact with different investors. It is gust.com. So Jake is parking right now. We're going to get started on our next panel. I'm going to introduce Aruna Viswanathan. She's an entrepreneur who's working on her next venture right now, but also has a variety of different businesses in the education space. She's also the outgoing president of Thai Houston. Leading this panel, we're going to talk about leveraging crowdfunding platforms. Jake, welcome. Good to see you.
Thank you.
Yeah. So within this panel, we're just going to lead us through and understand how the three different platforms are leveraging crowdfunding, both from the standpoint of connecting deals and working with entrepreneurs, as well as how entrepreneurs are using these platforms to connect with their customers, to raise capital, bring product awareness, product feedback, but really use them as a launch point for their business as well. So with that being said, please welcome Aruna to lead the panel.
Hi, good afternoon everyone, and thanks for coming out and staying out here today to attend our session on crowdfunding. Let me get a show of hands. How many of you are familiar with the concept of crowdfunding? Have done a little bit of research on it in the past? Okay, good. Looks like you guys will have some good questions coming at you. And how many of you, after that research, decided that maybe this is not the way for me to go? All right. Okay. Let me maybe just take a quick poll, and so that we can kind of maybe it's about dispelling some rumors as well. Maybe can a couple of you tell me, who raised your hand, why did you say, just a simple answer, why did you choose that maybe this wasn't the way to go? Yes, sir, the rep.
We didn't see why it part of the strategic partner Series A.
Okay, you couldn't see how it fit in the capital chain to get to Series A, okay? This lady?
It's way more crazy hard than going after investors.
Way more crazy hard than going after investors, okay? Any more observations, sir? The glasses.
It seemed like most of the information I might suggest that you need sort of like a gifting strategy and an emotional appeal to be successful. And we have something that I think is more science and engineering oriented.
Okay, not necessarily able to figure out how your product can appeal to the people that would normally be on those sites. And yes?
It makes me feel cheap.
Makes you feel cheap. Okay, well that would be a very different emotional sentiment than I would have thought. Okay, anybody else with a burning desire to share? Sir?
I feel that my products require more of a medium touch, and crowdfunding type product tends to be very standalone and operating with a no touch type of
Okay, inability to maybe show how that value proposition will translate through the internet and be able to resonate with investors. Okay, I'm going to take one last one of this gentleman in the back.
A whole bunch of people I don't know, and I got to make every one of them happy.
Do you like people?
I like people, but
Okay.
I don't know these people, and I got to make them all happy. And there's a lot of them.
I understand. Okay, well, these are all good points for you gentlemen to think about as you think about how you answer the questions today. So I'm going to go ahead and let us jump into the panel. So we're going to let these gentlemen introduce themselves. But just as a background, I think that JR and Knocki have set this up really well, because you have a company that has successfully completed a Kickstarter campaign, raised over $1 million, which is Knocki. You have a company that actually is a platform for doing crowdfunding, which is Abe at Nextseed, and so they actually work with clients in this area, in Houston and beyond in Texas, to help people raise money on a crowdfunding platform. And then Alex with Arovia, who's going to talk about his process of deciding to go down this route, much as you guys are deciding to go down this route, if you still remain amongst the believers here. So with no further ado, Jake.
Hello everyone, well thank you for having me. So just to restate the introduction, my name is Jake Boshernitzan. I'm the CEO and co-founder of a Houston-based hardware technology company. We have a consumer-facing product. And just a few months ago in June, we took our product to Kickstarter, setting a modest goal to raise $35,000. And we actually hit that goal in 1 hour. By the time the campaign was over, we had raised over $1 million. And the actual amount we reached made us the most funded Texas technology company in Kickstarter history. So, actually every last penny of that's allocated. But so anyway, I'll let you guys give your intros.
My name is Abe Chu. I'm a co-founder at Nextseed, also Houston-based. We were one of the first crowdfunding platforms approved by the Texas State Securities Board in 2015 to begin operating a debt crowdfunding platform. And we were the first platform nationwide approved by the SEC to launch under the new rules of Title III that allows for both accredited and non-accredited investors to participate in investment crowdfunding. Today we've raised about a little over $2 million for various businesses around Texas. I think within the next 20 minutes, if it's not up already, we'll have our first deal in California. So a restaurant in the Bay Area is crowdfunding $150,000 with us to help supplement the rest of their campaign. And yeah, I hope to address a lot of those questions and concerns that people had expressed earlier. Nice meeting you.
Hi, my name is Wesley. I'm the co-founder of Arovia. I'm kind of in the thick of all this stuff, as they mentioned. We make our first product called SPUD, the spontaneous pop-up display. It's a high-resolution 24-inch display that collapses down to the size of a book. Just pop it up in front of you so you guys won't be stuck on a small laptop screen or smartphone screens. So we'll make a display anywhere you want it. So we are doing a Kickstarter in about 1 month. We're also so Kickstarter. I think there's a lot of misconceptions about the different types of crowdfunding. Kickstarter is a grant crowdfund. You have Abe and his platform, which is a debt crowdfund, and there's also equity crowdfunding. And we're also exploring equity crowdfunding, which is a way that people would invest in your company through a platform called Fund, as a way to add on to our angel round that we just completed and subscribe. So there's a lot of resources out there. And I know that there's animate versions to get more people involved, and we've dealt with it in our own way. But there's a lot of people who have money in crowdfunding through its various forms. It's definitely a way to reach a lot of people.
Okay, I have a couple of questions, and then I'm going to allow you guys to obviously jump in as well. And I want to start by first discussing something that Abe said to provide some context to the audience. When I first met with Nextseed, this was kind of coming down the pipe, but this issue of both accredited and non-accredited investors being able to participate. Can you give an idea what the impact of that is for people who are looking to go into this arena?
Yeah, absolutely. So basically what Alex just mentioned, there are different types of crowdfunding. Rewards-based is the Kickstarter side, and then equity and debt really are opening up ways for private investors to begin participating. There are different layers within that, where for the past few years, the ability for accredited investors, meaning you make a certain level of annual income or have a certain level of net worth, can participate in investing. And what's recently happened is the SEC has opened up the rules so that even non-accredited people who don't necessarily meet those specific thresholds can now invest in private businesses through approved platforms. Really, if you think about any private fundraise, those types of thresholds come into play, right? All of us who have done fundraising for our own companies have had to go out and work with only angel investors or accredited investors. The ability to to raise money from non-accredited really is, a lot of that's being done out in the community nowadays is they're handshake deals, right? And so what crowdfunding does is we help formalize those deals, put contracts to them, help ensure payments go back, and really facilitate the whole ecosystem of the fundraise to returns for investors. So Title III of the crowdfunding rules, the Jobs Act, came into play just this past May. And what that does is allows non-accredited investors, everyday people, to begin investing in private businesses and participate in deals that were frankly exclusive before, right? You still have to meet certain income tests and things like that to determine how much you can invest. The SEC is obviously very careful about investor protection and things like that, so people can't get in over their heads. But the fact that everybody can now have access to the same types of opportunities is what we think is a game changer.
And another question, and any of you can jump in on this, is can you try to provide some context to the landscape? Because it's not just about the different areas of pre-sale or rewards-based or fundable or whatever, it's also their vertical. Vertical crowdfunding sites as well out there. And maybe any of you who have researched or have some comments on the different vertical sites that have come up.
What do you mean by verticals?
Well, like sort of industry-specific verticals.
So,
when we were exploring, so we're doing the Kickstarter right now as a pre-sale, and that's kind of a wide swath that will cover everything from things like Knocki to arts projects to somebody reviving a book. It covers the full swath. And the main reason you go to something like Kickstarter is because of that large audience size, because it gives you the opportunity to have $1 million raises like they had. But if you are going into, I think there's like oil and gas ones, there's very specific hardware startup ones, and we did look at those. And I think it's a function of what's your goal. I think in the case of Knocki and Arovia, our goal was to demonstrate a market and therefore raise as much as possible, rather than necessarily derive the most profit from the pre-sale. So I think that's what we're getting at. So, but I don't know too much about that. I'll let somebody else.
So, I was just going to say, as a startup, raising capital, we raised the seed round prior to going to Kickstarter, and then, Kickstarter is sort of the traditional crowdfunding that people were familiar with before equity crowdfunding and a lot of this other new types of crowdfunding. But what all of these are, a lot of the, equity type crowdfunding options out there, what they're doing, to your point, is they're democratizing, the ability to invest in companies that aren't, that are otherwise out of reach. And so I think there is an overlap in that you're reaching everyday people that are potentially investing either by getting a reward through Kickstarter or getting equity through Seed Invest. Generally, these people are probably more attracted to consumer-facing products, but that's not always the case. But it needs to be your presentation of your solution, your service, your product needs to be tailored to, obviously the audience that you're reaching out to.
Yeah, so I definitely second all those things. And there are different platforms that focus in different verticals. So Nextseed, for example, we focus on Main Street businesses, restaurants, bars, salons. Part of our value proposition is not that, you've got a bunch of people on your cap table now, but rather you've got a bunch of people who have lent you some money, and they're more likely to become your customers, clients, tell their friends about you. Right? If you invest in a restaurant down the street from you're more likely to go there and bring people there for meetings and things like that. And those benefits really are valuable to specific types of businesses. So finding the right partner that can help with solving the market need that you're looking for through crowdfunding, but also all of the build-up to get to that point. Right? I think Max was talking earlier about an elevator pitch and sharing how best to structure that. Well, on our side, we provide services where we help you build your entire campaign, do all the filing for you, help you take care of investor relations on the back end, so you don't have to keep 100 people happy. We facilitate those payments, right? So a lot of it is really about finding the platform that provides the right set of services and also targets the right niche or audience that you're looking for.
And I guess that's kind of the point I wanted to draw out was that, whether it's real estate, oil and gas, consumer focused, or otherwise, there are actually quite a lot of verticals these days to go after. You have to do a little bit of research to understand it. And also this notion that it's not become part of the continuum, that there is a continuum between, one type of that capital and then another type of capital going into it, that depending on the site, you can see that occurring. I've asked you, Jake, since you said you did a seed round and then you went into crowdfunding, how did you position that to your seed investors, and what were their thoughts or what apprehensions and things may have come out of that, if any?
That's a great question. Our seed round of investors, they're all sort of people that were in the Texas community that discovered our company through the accelerator that we were in Central Texas. All of them were very, I wouldn't say there really was any conflict between our conventional seed investors and our effort to raise additional capital through Kickstarter. In fact, one of the great things about crowdfunding is it's a unique opportunity for a company at a very early stage to establish brand equity in a way that otherwise is extremely expensive and extremely inaccessible to an early stage company, while simultaneously spending money rather than giving it to a PR agency or a marketing agency that would actually charge you significant money to give you the same sort of brand exposure. Through Kickstarter, we were able to sort of, through that success and the snowballing of that success, get exposure. We're in the current issue of Popular Science. We were in all the technology blogs. We were on television around the world. And so those are all things that our seed investors, obviously they are even more excited about the investment they made in the company. And so I'd say that these are very complementary services. And I can even speak to equity crowdfunding. In general, the response has been positive from our conventional investors when we've entertained the idea of equity crowdfunding, because similar to crowdfunding through a reward system like Kickstarter or Indiegogo, equity crowdfunding gives you a team, a large number of people that are essentially advocates that feel in some way like they're a part of your company. And it's much more of an asset than it is a liability. These are people who will speak well about your product, who are invested in your success. And also, it's not a nightmare on your cap table. You don't have like 300 or 1,000 different people on your cap table. Generally, there are often opportunities to put them all under one investment entity. So it's actually not complicated from a procedural standpoint.
What are the different equity crowdfunding sites?
Yeah, sure. There are several great ones out there. We have friends over at Seed Invest. That's a popular one, and one that I think we've had some local entrepreneurs find good success in. Start Engine is another great one out in California. Let's see, depending on the type of industry that you're going after, there are real estate platforms like Realty Shares, Realty Mobile. If you're going oil and gas, folks here in Houston, I think with Energy Funders, also a good platform to use. And so yeah, we often refer people across the board depending on the types of needs they have.
So Nextseed is actually a debt-based platform. So why don't you kind of explain how that works to folks so they can understand what you're doing and if they're at the right stage or who would be the right stage for you?
Sure. So so we do debt crowdfunding specifically. The rules really allow for any type of security to be sold, and we've chosen two types of products. One is a term loan. So imagine you going to a bank and getting a specific interest rate, specific payment schedule, and that type of thing. It's really pretty standard. Each month you'd be paying off principal and interest. The other type of product that we do is actually a revenue sharing model, where you raise let's say $100,000 with us, you commit to paying back a specific total multiple. So one example is, let's say you pay back 1.5x. What you would be doing is sharing a percentage of your monthly revenues until you pay that total 1.5 off. And so there's flexibility based in that. We like to use that with businesses that are just getting off the ground. So there's that flexibility of maybe smaller payments at the beginning when your revenues are still picking up. And then at a later date, as you take off and hopefully the crowd gets behind you and supports you, then you pay a little more at the end. And ideally, things take off so well that you pay off the whole amount maybe ahead of schedule. But in those two structures, what we're doing is we're allowing you to raise the money you need, but without having to give up equity. And that's part of the appeal for a lot of business owners we work with, is that with a lot of the successful restaurateurs that we're operating with, Peli Peli is an example of a local restaurant that we help fund. They were willing to pay a little more than what they were willing to pay to a bank, just because of that advocacy you were talking about, of people coming and sharing about you. So one example is the Houston Press has their annual best of Houston list, right? So last year, Peli Peli was nominated for one award, and this year they sent out a notice to all their investors saying, "Hey, we're running again, so can you help vote for us?" And they were nominated in 6 categories this year. So we think, their investor base had a lot to do with that, of getting out there and sharing and spreading the word. We focus on Main Street businesses because, primarily for cash flow purposes, right? Because we're a debt product and not an equity product. Unfortunately, a lot of tech startups, frankly ourselves included, can't afford to necessarily pay back the loan right away. So Main Street businesses, like the ones I mentioned in those categories, are more likely to have the cash flow necessary. And we do a lot of the vetting up front, looking at financial plans, pro formas, the business plan, history, to understand whether or not that business would qualify, and the type of repayment structure that would work best.
So Alex, you're about to launch this campaign for Spud. Why don't you give us an idea of how do you know this is the right time to do it? What feedback have you gotten to say that let's go ahead and pull the plug and get going now, as opposed to 6 months from now or 6 months ago?
I also want to address the point Jake made. I mean, they did an amazing job with their campaign, but you don't just wake up in the morning and have $1 million campaign. It's a pain in the ass to do a really good Kickstarter. Like, you need to invest a lot in your video. You need to spend months, if not years, accumulating a sign-up list. Right? The general, talking to entrepreneurs like Jake, you want to have a sign-up list around 10,000 at least to have a successful one, and you want to do a good job with press like they did too. So there's a lot of costs that go into having a very successful Kickstarter, which is why a lot of people do a seed or an angel round before going into a Kickstarter. That's why we had to do an angel round, because in order to pay for things like the video and our ad costs and things like that. So even though you would think, I could just put anything up there. Additionally, Kickstarter has rules against showing renderings and things like that. You have to have a working prototype, and you have to see that it works. So this idea that you put a hunk of cheese on Kickstarter and raise $1 million, just isn't there anymore. It's a real pain in the butt to do it successfully. Why we decided to do it is instead of doing the seed before the Kickstarter, like Jake did, we're going to be doing our seed after. We think an important part of having a successful seed that has better terms, in our case, is establishing the market. It's a completely new type of product, and it's part of our overall strategy, both on fundraising, establishing our market, and moving to retail, to do the Kickstarter when we're doing it. But the cool thing about entrepreneurship is that there's infinite paths. Like, crowdfunding is one of them, and this is just the path that we decided to take. We could have gone direct to retail, that has its own pitfalls. Could do online sales, again, has its own pitfalls. So it's just, all of us are just trying to learn every day and make the best decisions with the information you have, I think.
Those are all great points. It's definitely not luck to have a successful Kickstarter campaign or crowdfunding campaign. There's a lot of preparation that goes into it, and in terms of our experience, we did set a modest goal of raising $35,000. We had a feeling we would do better than that. We weren't banking on making $1 million, but what we were fortunate to have done in the time prior to our Kickstarter while we were preparing for it was to start collecting information from consumers about what specifically about our product they like, what messages resonate, what messages don't resonate. And the way we did that was actually by, even prior to our Kickstarter, taking pre-orders directly on our website, getting traffic to our website through advertisement on Facebook, and then testing different messaging. So A/B testing, and then determining, do people really care about using Knocki to turn on lights, or do they care about being able to control their thermostat, or who are our target customers? Are they people with mobility impairments? Are they people that are tech savvy? Are they college kids? And so Kickstarter is an opportunity to do that, but you don't often have a second chance on Kickstarter to make that first impression. And so to the extent that it's possible to really do some of that initial market validation, market testing, and optimization of your value proposition before you go to crowdfunding, the better. And so just a quick story I'll throw in here. Last summer while we were at an accelerator, very small one in Bryan, Texas, we had some patents around our technology. We had an early prototype, but we had no clue if people were going to pay for it. And to your point, investors don't just want a great idea. They want to know that people are willing to take their wallet out and buy your product or service. And so how are we to do this? We didn't have any funding. We had an early prototype that looked like this 3D printed monstrosity. So what we did, we went to Lowe's, we bought a towel holder, we ripped off the base, slapped on the Knocki logo, took some pretty pictures of it on a wall, told people it was a Knocki, and we allowed them to place pre-orders, letting them know it was a product in development. We were honest about that, and that we wouldn't actually charge their cards until the product was ready to ship. And then we generated traffic through ads online, and we were able to generate a significant amount of sales directly through our website, allowing us to show investors that there was traction, but that also gave us a foundation of data about what people want in our products, so that when we went to Kickstarter, it was a little bit less of throwing the dice and seeing what happened, and more of having an understanding already of how the product would do.
I love that story. This is great. Sort of we're build it and they will come sort of thing, but just not even building it. So I guess in that sense it makes a lot of sense, right? The more feedback you have either through Facebook or through your channels to understand what resonates before you develop your video for a Kickstarter. But in Abe's case, you kind of help them through that understanding, because you understand that who he's talking about as their customer is their investor, and you're holding on to those investors. That's your pool of investors, right?
Yeah. So people actually create accounts on Nextseed like you would a brokerage account, right? Put money in there, and instead of investing in stocks, they're investing in local businesses and getting paid back to that account and reinvesting in the next deal. So there's a whole ecosystem that we're building out. But I mean, to that point too of it is really about storytelling, and can you tell an effective story? Right? That's at the end of the day, that's really all it comes down to. That's all any fundraising comes down to. Right? Can you pitch with those points that were brought up in the earlier presentation? Can you provide certainty? Can you help people really understand where you're going and why you're the best team to get there? And that that you maybe have a track record of doing so. All those things are important. Really the same way that you would be building out your business plan and pitching to private investors. This is, yes, there's a little difference because you're not asking for a ton of money from each individual, but having your story pat, knowing exactly who you are and why, and what you're selling is still universally applicable.
Okay, I think we'll go ahead and get some questions from the audience. So, if any of you have some thoughts you want to, yes. And are we using microphones? Is that the process?
Thank you. Why did you choose debt instead of equity?
We chose debt because, frankly, it's a much bigger market that needs to be served. If you look at the lending marketplace in Texas and the U.S., we're talking hundreds of billions of dollars in loans that are being made all the time, and it's completely underserved. If you talk to almost any entrepreneur, what we found is that people want to invest in things that they care about, whether it's a startup out of Houston or a restaurant that's down the street from you. Almost every business that you're talking to at any phase of their growth or expansion, they're looking for financing. And so as we talk to more and more restaurants and bars and salons, a lot of those businesses, frankly, aren't as familiar or well-versed in what it means to take on equity investors, right? A lot of them are more familiar with, go to the bank for a loan, or in unfortunate situations, they go with merchant cash advance, which is just a brutal way. Or they go to friends and family, and most of those are loans, right? I give my cousin, $1,000 and he'll pay me back over time. And so when we looked at the familiar language that people were speaking, that just made a lot more sense to us.
Let's see, when you're selling on Kickstarter, how do you do your pricing so that way it doesn't hurt you later on?
That's a great question, and pricing really is one of the most important things to pay attention to in a Kickstarter campaign. Generally, it's conventional on Kickstarter or Indiegogo to price the product at a lower price point than what you expect your MSRP to be, because if you end up having too high of a price when you're crowdfunding, and then setting a much lower price in retail, first of all, your backers will resent that, because you're sort of rewarding them, you're reciprocating by them backing you early. You're returning the favor with a preferable price. And then the other thing to look at is what the actual price point is for your product, and so that's obviously you're factoring in many things. What's your COG, or cost of the goods sold, and your cost of customer acquisition. Also, what price are people willing to pay? So what are comparable products in the market, maybe in the same space, even if they aren't directly competitive, and and gauge from that what people are willing to pay. And another thing that's very effective, at least with Kickstarter, is to leverage sort of the psychological aspect of scarcity. All human beings respond to scarcity being associated with value. And so, allow, make, a super early bird package for the people that come in first, and have a limited quantity of those. And then another tier that's early bird, maybe not quite super early bird, that people can get. And then a standard, price, and then your MSRP price that you may not even ever hit during your Kickstarter campaign. But those are some key points.
Yeah, my understanding is that you don't really get held too much to your price. There's a lot of these projects that take years to deliver. You don't want to deal with those, but you definitely want to make sure that you're not pricing too low, so that you can't even deliver. A number of projects have got that problem, and so there's independent parties like Dragon Innovation that will validate your cost of goods sold and your manufacturing plan. We did a program they have called Dragon Certified. So that's kind of the first failure mode that Jake was describing. That you can't deliver your hose in a number of ways, but then if you price too high, then you might
I was just curious on the, two questions. One is deal size, what's kind of the average range of deal size both on the debt and equity side? And with the relative newness of crowdfunding, one of my points of reticence is looking at how the next investor that you have to raise looks at crowdfunding. And the concern is that it seems like VCs look for any reason to say no, and that this might be just another reason to say no downstream. We need to add more funding to you.
On Nextseed, I'd say the average size of campaigns that we do is probably in the 200,000 to 300,000 range. And it's really about the business's need, right? So we evaluate the total amount they're asking for in context of what's functionally needed to run the business. So you can't just have an indefinite cap. I think to an earlier question of how it fits as well within an overall financing package, oftentimes we're part and parcel with a bank loan and some equity investors with the Nextseed code kind of on top to fill out the rest. So we look at each case a little differently. And then also with Title III crowdfunding specifically, raising under those rules, businesses are allowed to raise up to $1 million a year under Title III. And if you go into the Reg D space, or Reg A Plus, or any host of other levels of crowdfunding, their caps are very different. So we just have to look into what fits best in that scenario. How people or how VCs look at it afterwards, I'll let these guys talk a little bit more, but I would say that I think crowdfunding is really part of the future going forward. So yeah, there may be some resistance from certain VCs, but I think it's becoming the new norm.
Yeah, I can't speak to Series A or Series B investors. We're not at that point, but we're currently raising a post-seed round, and we've contemplated adding some equity crowdfunding into the mix, and wanted to sort of gauge how conventional investors would perceive that. And generally, our impression has been that if you do perform well with equity crowdfunding, similar to regular consumer-facing reward-based crowdfunding like Kickstarter, raising money successfully through that method is perceived as a positive for the company. But it's possible that Series A and sort of these very institutional type investors would add complexity to, but I just don't know.
Yeah, we're considering doing our crowdfunding under Reg D, which means we're dealing with accredited investors, and for the angel round that would be extending the current lead investor would stay as the lead investor. So it's just another way for us to access additional money. In the case where you're dealing with a person who can put in significantly less money and you have hundreds, thousands of investors, I can see that being a pain in the butt to deal with, which is why I haven't pursued it yet. But all of this is coming to fruition, and if you're willing to be adventuresome, then I'm sure there's going to be a lot of people learning a lot of lessons, maybe us in the future.
I think we have time for one more question, Jill.
Can you talk about the timeline, specifically how long before your campaigns did you start preparing and what activities?
Sure. So with our Kickstarter campaign, I'd say that we started preparing several months in advance, and so there were a few facets to our preparation. One was, someone mentioned that it's very good to have that initial momentum by collecting emails of people that will be interested in the product, because how you perform in the first hours, the first day of your campaign, can actually greatly impact the overall performance of the campaign. So collecting those emails, the way we did it was through ads on Facebook and then a landing page where people could actually submit their email themselves if they were interested. We collected over 10,000 emails that way. We also went on a PR tour, so we actually called up TechCrunch, Popular Science, Good Housekeeping, Engadget, The Verge, and others, and basically booked a bunch of meetings one day and flew up to Manhattan and just did demonstrations for our product. And that actually allowed us to get people that did a news story about our product on the day of launch. So that's hugely valuable. Also, video production is very important to have. It generally takes a minimum of a month to prepare an effective video. And one thing I just wanted to speak to in general is that, what's the strategy to actually, whether it's Kickstarter or whether it's equity crowdfunding, what's the strategy to actually compel people to see the value of your company and want to actually put money into your company? And it's a lot more than just, presenting a problem and a solution. Traditionally, if you have a startup, you're presenting a new idea that hasn't been in the market. And most people really don't understand new ideas until their friends and their neighbors or they themselves experience them. I mean, the iPad was something that people laughed at, saying, oh, it's just a giant iPod Touch, it's pointless. And now you can see very few people saying that. So, around a problem solution, what I recommend doing is, and this is true for the landing page that you prepare as you're preparing for the campaign, for the video that you prepare, for any kind of ads that you prepare, is that you really frame the value proposition by, in the context of truths that are understood. For example, with our product, our product is a control interface for connected devices. So making simple statements like, everyone wants technology to be simpler, or things that are complicated or bad, or it's just making those statements that get people nodding their head and agreeing with you goes a far way towards allowing you to then spoon feed them some of the unique aspects of your product and have them accept it without saying, oh, I don't get it.
I think that was pretty well spot on. I mean, I had signups with you, Chris, so I think you pretty much covered it. Behind the signups, Jake mentioned a lot of A/B testing, and we went through, I'm guessing, at least 30 different iterations of our Facebook ads to narrow down, and you learn a lot as you do that. But I really don't have anything significant of value to add to what you said. So I guess there's some truths in a successful Kickstarter. Get a lot of signups, have a really good video, and if you want to, go do a press tour.
Jake, quick question. So if I'm Alex and I'm preparing for my Kickstarter campaign, what's the thing that you would go back now, going through that, about what happens once it's completed, that you wish you would have known, at that point while you were preparing for it? Is there anything, as far as now that we've completed this campaign, we weren't ready for this? Is there anything we would have done? Yeah, just looking back now, going through that, because there's this big launch, so it's like a product launch into the Kickstarter. But then once you actually have that Kickstarter, you complete that campaign, you get all this customer feedback. Is there something in that process, and then day one after the campaign concludes?
That's a great question, and there are probably a few opportunities that, in retrospect, I could identify. One thing that comes to mind is that there was such a huge discovery process during the Kickstarter campaign. You have hundreds of thousands, if not millions, of eyeballs on your product or solution around the world. And along with that comes a lot of feedback and people saying, hey, we'd like to see you add this feature or that feature. And part of the effort of getting your backers engaged in your product is to actually listen to the feedback and incorporate some of that into the product you ultimately release. Now, we have a target date of shipping these products in December, but that target was set when we started our campaign, and before we had 50 great ideas from backers, which we have to prioritize, and some of which we're going to incorporate, but those naturally extend our delivery times. So what I wish we had done was, when we were collecting pre-orders and actually getting people or collecting the emails earlier on, I wish we would have had a little bit more of a dialogue so that we sort of could have actually scoped some of that feedback into our product at the time that our Kickstarter initially began.
All right, was that one question. One word answer. What is the single biggest company that has been successfully funded through crowdfunding? Anything that comes to mind?
Pebble,
Pebble?
Pebble, and then after that, Coolest Cooler, which was a cooler that you take to picnics that would blend your drinks, charge your phone, had a built-in flashlight, had a built-in dish and fork, and had doubled as a bench and doubled as it was a Swiss Army knife. Does everything, cooler for $300, and they sold a lot of it.
Yeah, they were that second failure mode where they priced too low. So if you went to South by Southwest last year, pretty much every panel was decrying them because they let a lot of people down. Because these people are investing in you and your product, and they want to be the first people to get it. And Coolest Cooler delivered on Amazon first because it's better cash flow. So you definitely need to make sure you do a good job of understanding how much your product's going to cost, including the fixed cost and timeline. There's a lot that goes into taking even a prototype into production.